Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network. Before we get into today's show, there are a few things we have to go over. Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you'd get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program. Adam, thanks for taking some time to join me on the podcast.
Thanks, Owen.
It's always a pleasure to chat to people that have very special insights, but also people that can bring a new perspective to a new asset class for us. We've talked about property a little bit on the show, but not really.
Sure.
So you're going to be our field guide today. I like to, at the start, when I'm introducing a new guest, is go back and hear a bit about your upbringing. We talked off air, you're a Gippsland boy here in Victoria. Tell us a little bit about yourself and how you got involved in finance, in particular property investing.
Sure. To start off with, it might surprise you to know, but schooling wasn't sort of a big friend of mine. As much as I enjoyed school, I enjoyed more the social aspect of school.
Yeah, right.
Getting to know people, having a good time. That was a big part of my growing up in school. And left school at the age of 17, finished year 12. Went in to do, and I quite enjoyed web developing for some reason. That was just caught my eye, and graphic design caught my eye for a long time. And just started working in that space. And then ended up, I remember going for a job as a sort of 19-year-old, 20-year-old web developer, graphic designer, and there would have been 40,000 people applying for this role, and the job would have been for 35 grand. And I went, this is not for me. I'm not great in the space. I enjoy it, but no, I've got some bigger things to do. So I thought, I like people. What can I do? What kind of role works with people? And I thought, real estate agent. Like, that's all they do. They just talk to people all day. They visit people, go to people's houses. They go, perfect. I'll get into that. At the same time, my parents were starting the organisation Castlerock.
Yeah.
So I thought, well, whilst I'm going and educating myself to become a real estate agent, I work for the family business. And back then it was mum, dad, another gent we had working with us back then. And I came along as an absolute brand new person to property, 19 years old. I honestly didn't know what a vendor was. It was complete grassroots for me. So I'm out there learning to become a real estate agent, and one day Centrelink came to the market and said, we did a new office space in Victor Harbour in South Australia. And my old man looked at me and said, you need to go jump on a plane, get into Victor Harbour, you need to find a site. And I thought, no worries, I can talk to people, 19-year-old, no worries, jump on a plane, rock over there, found a site, convinced the person to sell it to us. We put a proposal to the government back in the day with Centrelink. After a long while, ended up winning the deal to build them a new office space and lease it to them. And I thought, actually really quite like this, whole winning, going, travelling.
Yep.
That was a big passion of mine back in the day and still is. But travelling, winning deals, working with people, I go, this is great. Like, the feeling is fantastic. Let's keep it running. And from that, I thought, well, being a real estate agent was great, but let's stay here and let's really work on this family business. And Castlerock just sort of started to grow from there. It was my role to get out there, find opportunities to start to develop buildings, mainly for government, and to work with the construction team and deliver those assets. So it was just it was a really sort of interesting ride, and learning from day one. My job was to fold the plans that were building the buildings and send them out, put them in the envelopes and send them out. So the life cycle of working from the absolute bottom all the way through the organisation's been terrific from my experience.
Question for you: how did you decide on that very first property? How did you decide on that property for Centrelink? Do you remember?
It was honestly just walking up and down the street. What is it that I could buy? I mean, there's only a certain area within towns where you can build office buildings. So I've got the zoning map, and I'm walking around going, can I buy that? Can I buy that? Can I buy that?
Yeah.
And and you get to one and go, I reckon that one I could possibly buy. There's an old shed on it. It looks underutilized. Can we get in there and buy it? And just had a crack. And I mean, there's many doors you knock on, but this was just the lucky one, I guess.
Yeah, right. Because I can imagine the vendor at the time was thinking, who's this young fella coming in the front door telling me that he wants to buy the place?
Exactly. And they're the funny sort of conversations and difficult conversations that I enjoy having. It's a bit of a challenge. You're walking in there and you're going, hi, my name's Adam. I'm interested in buying your land. Yeah. And they go, where did you come from?
Yeah.
And off the conversation starts from there. And it was great. They were great, a really good experience to go through that. And meanwhile, like I'm out there sort of working on these property deals, and my old man's in the background going, okay, great. What are we going to do with all these deals once Adam wins them all? And from that, the idea of setting up property funds and property trusts began. It began in a very sort of simple way in just, we'd find a deal, we'd win it and syndicate the property. And all of a sudden we had little syndications of properties everywhere. Castlerock still managed them as an organisation, managing the building. But we had all these sort of groups of investors everywhere, and we thought, hey, it wasn't my idea, it was my old man's idea, but hey, let's bring them all into one. And start these property funds, which was the beginning of probably about 10 years ago now, 15 years ago.
Can you explain, just on that, the difference between property syndicates and having a trust? Is there a major difference? Like, what are the benefits of being a syndicate versus having the trust?
Syndicates generally will be a single property syndication where you've got a group of people maybe put together by an accounting firm or a legal firm, anyone really, and that syndicate of people would invest in that particular property. The governance measures, there's probably no board involved. There's probably a charter involved. But when you start to move into the property fund space, it becomes a lot more, the governance levels are a lot higher. You've got a proper board that sits in there. You've got you may or may not have a custodian, depending on whether you're a retail fund or not. And I guess the property funds have got the opportunity to have a lot of properties inside the fund itself, not just
just a single one.
No.
Yeah, right. So, and that kind of leads us on to, I guess, Castlerock, and in particular the funds, because I believe that Centrelink deal was the first of many.
That's right.
Yeah.
That's
so, can you explain? Is that where the name Auslink comes from?
It's a funny one.
Yeah.
The first sort of major fund we started was called Auswide. And the idea was we had properties Australia-wide, right?
Yeah.
So out came the name Auswide Property Fund, and it was good. Like, it was a great start to that. And the partners we were working with probably didn't have the capabilities of raising the equity that we were wanting with all the projects that we were winning. So we went out back to the market and we found some other equity partners to start working with. And we thought, well, we need a name.
Yeah.
And we're still winning these Centrelink deals. So Australia and Centrelink paced those two together, and out came the name Auslink.
Okay.
And it was just really a function of the time that was there. And so it became Auslink Property Trust.
Yeah, great. So, one more question on you before we move on to about Castlerock and that generally is, what does a typical day look like for you now? Like, it's a lot bigger than it was when you first started.
Yeah.
It was 2003 around that time?
Yeah, correct. Yeah.
It's a lot bigger today. What do you do today? Like, are you still looking for properties? Are you still out there scouting, doing all that stuff?
So my area of the business is still business development. So I'm out there looking for new opportunities every day. We've got a small team, development team and acquisitions team. We've just engaged a new property analyst, which is fantastic. So we've got a growing team out there looking for new opportunities all the time. But every day we've got dealing with tenants, we've got dealing with facilities management, dealing with leases. The team's growing, so finding the office space.
Yeah,
it's a growing organisation, and just making sure we're all heading in the right direction.
Yeah, cool. So, tell me about buying properties for Centrelink. Effectively, I feel like Centrelink would be a great tenant to have. If you're going to lease it to someone, you could lease it to Centrelink and be pretty confident that they're going to pay their dues, right?
Yep. And the Auslink Property Trust number one was a fantastic vehicle for that. We invested in 18 Centrelink offices located all throughout Australia, and they've been fantastic assets. And Centrelink are great. we'll develop a property or buy a property in places like Gundawindi or Broken Hill,
right.
in the middle of nowhere places. But those assets, those buildings need to meet a very specific set of needs for Centrelink, for example. So it's got to have DDA accessible access. People in wheelchairs have got to be able to access it. It's got to have a high NABERS 4.5 star energy rating. It's important for the government. They've got to have multitudes of natural light and things happening at ground floor level, public toilets and so forth. So they're really an interesting asset, given that they're very bespoke in unusual places. So there's not many places in Broken Hill where you can have this level of asset. So they've been really fantastic to work with, and it's great to deliver properties in these regions that are well above the range of properties in those towns.
Can you explain for myself and the listeners the basic way that Castlerock as a business grows? So how do you, when we talk about property trusts or funds, we talk about using leverage or debt. We talk about buying the right assets. Like, how have you guys been so successful over time, whereas a lot of other property investors haven't?
Yeah.
What's kind of some of the secret sauce? If you can share us some
sure.
secrets and wisdom.
Yeah, honestly, I think we're kind of this grassroots business who looks at property from the foundations up, because we came from that construction, building, developing mentality. We look at these assets and our tenants very closely, and everything's managed in-house. So we take a very, very keen eye over all of our assets, either whether we've developed or whether we've purchased it. And we look at it, is this a good building? Like, let's just start with that. Are we buying a good asset? Is it a good building? Is the facilities in there suitable? How long are they going to last? Is there going to be much capital expenditure going forward? All those things get reviewed before we look at buying buildings, and obviously buying new ones or developing new ones. You've got an edge there. And then it's really about the tenant for us, working really closely with them to make sure that asset stays up to standard, not letting it go, not having lights out or the air conditioning not working, making sure that everything's spot on for them so that they've got no issues. There's no reason for them to leave.
I've heard that some funds will outsource management, and I know that they do, and effectively that there's the investors and then there's the property management. Why do you keep it in-house? Like, what's the strategic advantage there for you doing both?
I think it's that constant communication with our tenants.
Yeah, right.
And tenants are the ones that are paying the bills who sort of enable the investors to get their returns.
Yeah.
So making sure we're working really closely with them and managing that in-house is probably the best way that we can imagine doing it.
Yeah.
So we're constantly having those communications. They're dealing directly with us all the time. We're able to make decisions for the tenants and for the investors pretty quickly. Mm-hmm. And because we've had that grassroots knowledge base of these buildings, we're able to respond to any issues that may occur inside the office really quickly.
Yeah. Does it also enable you, when you go to a property, we'll get to one in a minute, when you go to a property and you think, that could be done better, like, do you see that as like a value add, in terms of IRR return for your investors? Is that kind of, I feel like that would be
absolutely.
One. Yeah,
absolutely. If there's a way that we can enhance the building, increase the rent, get better tenants in there, absolutely. And knowing that, walking through that those assets for the first time, you can get a really good sense of, are we buying a good asset? Are we buying a good building? What else can we improve moving forward?
Yeah. There's one thing that we want listeners to be aware of is the Auslink Property Trust number 2, which is the bigger of the two funds.
Correct. Yeah.
And this, correct me if I'm wrong, this is the only one that's open to retail investors as well.
That's right.
Yeah.
That's right.
And the catalyst for us doing the podcast today is you've bought a property in Ipswich.
That's right.
Can you tell us about that property, just to, what it is, why you bought it?
Yep. Essentially, it's 17,500 square metre facility, purpose-built for Queensland State Government. Part of a rejuvenation process of the Ipswich CBD, where local government saw an opportunity to revitalise the area. Doing that, consolidating office accommodation. I think they had quite a bit of office accommodation all throughout Ipswich CBD. So consolidating all that into one building and having a high quality asset government saw some great synergies in revitalising the CBD for that reason. It came to us through an off-market opportunity. We saw it and we thought, this is really something we want to get stuck into. We've got assets currently leased to Queensland State Government in Townsville and Mackay as well. So it's, again, building on those relationships we've already got with the Queensland State Government. It's a well-diversified asset as far as the government's concerned. They lease 90% of the building. NDIS are in there for a small portion, and we've got some retail tenancies at ground floor level as well. But their, I guess their departmental mix in there is quite diverse too. So it's got some good qualities from that aspect.
Yeah, right. So you said it was off market.
Yeah.
How did that come to you? So one of the things we talk about, right, as investors is obviously how do you find ideas, and we're primarily talking about the equity side, but how do you find them because I doubt you were just happen to be walking down Ipswich main town that day. Like, how did they come to you, and how do you build that pipeline for yourself?
Yeah. It is, a lot of in the property market is a lot of who you know.
Yeah, right.
And working, I think Castlerock's established a reputation recently that if we're interested in an asset, we'll take our time getting to know it. But as soon as we commit to it, we'll buy it.
Yeah.
And we've shown that through the acquisition recently of the Wollongong ATO office building up in Townsville, and office building in Launceston as well.
Yeah.
Where we approached it and we go, is this something we want to get involved in? We can make those decisions pretty quickly in-house, go have a look at it, get to know the building pretty quickly, and then go bang straight into DD and be able to offer a unconditional offer to the current owners. I think word starts to spread around the property sector, and it's not big.
Not at this size anyway.
No.
Yeah.
If Castlerock are interested in a government lease asset, if you've got them, then they're able to complete pretty quickly.
Well, you said you do, your DD. What goes into a building like that one in Ipswich?
A lot.
Yeah.
So there's a lot of legal DD work that we do. Everything from, of course, just combing through the leases that are in place at that point in time. What are issues with the title, the planning application, making sure we've got the right insurance over the property as well. How well is it covered? Going through every section of the building, what level of services are there, do a technical due diligence report where we'll get people to check what life cycles left in any of the air conditioning equipment, electrical, mechanical services in the building, and fire services in the building, so we can understand what CapEx works are coming up in the next 5 to 10 years. The same with lifts. So it's a full get to know the building from top to bottom, and then look at the asset. Can we increase or improve the end of trip facilities, for example, to make it a little bit more palatable for the tenants? What can we do inside there to make it better for them? What neighbours rating has the building got? Is it performing well from an energy point of view and water consumption point of view? Solar, can we increase the amount of solar panels that are on the building? So, it's quite a detailed process, and one that we've established sort of over the years of not only building but purchasing these types of assets. And it's quite a detailed review.
Because I imagine, like, if we think about, I guess a lot of people listening to this are investors in residential property, right? And they're doing their own DD on the properties that they buy. But I imagine this is quite a bit more sophisticated because it's obviously dependent on leases and clients, like in terms of the government leasing those. So it's a bit more sophisticated in that sense. How about then, like, do you go, like, you obviously go there and you look around the building, you speak to people. I think I heard you say in one podcast or interview that you did recently, people, like a lot of people like me, right? Sometimes I get cynical. I'm like, that's not a great building because the cafe is not great or whatever, downstairs. And I think about that ground level.
Yep.
But I think you said in a podcast that basically they're there to support who's ever upstairs, like to keep them entertained is effectively, that's how you think about it. Yeah. Is that fair?
Yeah, that is. The major client, the major tenant in that building is one of the most important things for the asset. So making sure that they stay happy. So looking at the cafes downstairs or what can we do to the building to improve it to make sure that they've got a really enjoyable experience coming to work.
Yeah.
So we look at that. We're starting to now talk about implementing Christmas trees and things at the ground floor level and having sort of little events every now and then just to keep the tenants really engaged. This is a great building. It's trying to build a really nice community for the people working there.
Yeah. I don't think it's this one, but you said this was an off-market deal.
Correct.
Do brokers play a role in the space that you operate in? Because people are familiar with real estate agents selling them properties. Do they play a role in coming to you? And I imagine it's something like a sell-side research for managed funds where you get brokers knocking your door to say, do you want this? Do you want this? Do you want this? Is that what they do too? Like they know you and they say, hey, Adam, what do you think about this?
Yeah, look, I mean, we get calls from real estate agents all the time. It's because
it'd be hard to move those, right?
Yeah.
Because they're big assets.
Yeah. And the agents need to know that if we take it to a particular purchaser, can they complete? Or are they just going to waste the vendor's time and therefore I'm not going to get a deal done?
Yeah.
But that's part of being part of the market is knowing the people who to talk to, and they can talk to us about potential assets. And I think a lot of the real estate agents know the types of assets we're looking for.
Yeah.
Long-term income generating solid assets, and a lot of it's regional too.
Yeah.
We see a lot of value being in the regions where we've got a little bit better return. Sure, the capital may not increase as much as you do in the CBDs, but certainly the cash return from the rental income is a bit higher in the regions.
This is actually just jumping down a few things that I want to talk to you about, but one of those is having that regional focus. Do you reckon that's been an advantage to you since COVID's hit? I feel like almost in a way that's positioned you well to deal with that.
There's been a lot of talk working from home, working close to home.
Well, we were just talking about it.
We were just talking about it. And I mean, I've expressed that I'm not a big fan of working from home.
Yeah.
I think that's well known inside our office, that's for sure. But I think it has. I mean, a lot of people are starting to talk about decentralisation, getting out of the cities, working close to home, having satellite offices. I mean, a lot of our assets are. All of them are pretty much leased up. We're 99% occupied, so we don't sort of have any leasing risk. But it's certainly sort of having those assets in the regions talks a lot to people not being so city centric, having to come in from the outer suburbs into the city every day. That maybe start to become a thing of the past.
Yeah.
And having regional assets really works to that advantage.
So the other piece of this conversation is basically, so we talked about finding assets, right? Because I know, like a lot of the listeners, and I'm going through a property renovation at the moment too. So I know that's it, right? Like it sounds glamorous. People put it on the TV. It sounds great, but anyone that's done one will know that it's not always that much fun.
Yep.
So I guess some of the things that I'm thinking about for you guys is if people want to invest with you, that's a key point of your strategy, right? Because you have to get the funds to buy the properties.
Yep.
Because I think you've already committed to buying this asset. So then you go and you talk to investors like our listeners who want to get exposure to property. How do you find that any of the Castlerock funds sit within a portfolio? Because it's obviously, I'm thinking like income, right? Like, is it like alternative income? Is it in the fixed income bucket, like taking some of that when you speak to people? Is that what they're thinking?
Yeah, I think honestly it's exposure to commercial property and exposure to income generating property. It's probably not for big capital growth, although the Auslink Property Trust has done really well over its time. It returned $1 into $1.36, which has been really, really, really good. But that's not its main focus. Its main focus is just that steady income stream that's derived from the tenants, from the tenants paying rent.
Yeah.
I guess it's really up to the advisors really to sort of determine where it sits within their portfolios. But we're just always about just generating a good, solid income return.
Yeah. Back to finding a property then, how do you put a value on a property? So, I talk to a lot of people about this. I know people who are property valuers who do residential propities. But how do you find something like, it's the Icon building in Ipswich?
Icon in Ipswich, yeah.
How do you put a value on that? Is it comparable sales? Do you use things like capitalization rates? Like, how are you working out what is a good price to pay?
Yeah. I think from a really basic starting point is just the cap rates. What's the market paying for cap rates at the moment for these types of assets?
So what does that mean? Like, can you break down the cap rate and just what it means for people who may be new to property?
Yeah. So essentially capitalisation rate might be if we talk about some core assets, say in the city at the moment, then the cap rate might be 4%. So you'll get the current passing income for that, the net passing income for that property, divide it by 4%, being the cap rate, gives you the value of the building.
Yeah, right.
So you can basically say, if I buy this building for $100 million, I'm going to get a 4% return on that asset. It's really sort of a really
so it's like an expected rate of return kind of thing.
Yeah, a really bare bones sort of look at it. We look at it quite a bit more detail than that.
Yeah, for sure.
We start to think about what's the actual asset worth from a replacement point of view. We've got to look at it from that.
Yep.
We look at it from, the current income for this building sitting at X. What would the market lease that building for if it was leased up today?
Yep.
Is there any difference between the current income rate and the expected income rate in the marketplace today? And does it have any effect on the value of the building going forward? So if the building is, if the tenant's paying more rent than what the market may be expecting for an asset like that, then we'll look at, what's the expected income for that building and apply a cap rate to that.
Yeah, right.
And run the net present value of the over rent that we call it for the next, say, 5 or 10 years that the tenant's in there for.
How does... So I'm guessing you're thinking about this. Like, a lot of people talk about inflation, and at least in 2021, that's been a topic that people talk about, because with inflation comes the prospect of rising rates. Interest
rates, yeah.
Yeah. How do you think about rates with respect to just all the portfolio, I guess, in general?
Yeah. We do a fair bit of work in trying to understand where rates are going.
Yeah.
Can anyone predict it? I doubt it. But we can sort of use our best guess. We certainly do believe we're in a very low income interest rate environment at the moment.
Yep.
Is it going to hang around for the next 10 years? No. But it'll start to climb in the next 3 or 4 years.
Yep.
And it'll go up slowly. There's a few things that need to happen before that occurs with income. For people rising,
wages growth.
Wages growth, start to see a bit more of that happening. But I think it's fairly steady interest rates environment at the moment. But it'll look like we'll start to increase soon.
Yeah. And does from a leasing perspective, do you build like in a lot of the contracts you have, are they built in to increase at certain increments? Is that loosely how it works?
Yeah, sure. So if we start up a brand new leasing deal with one of our tenants, it'll have either CPI-based increases every year, so that might increase at the same rate as CPI in that particular area, or we might have fixed increases. So a lot of our buildings are 3.5% fixed increases every year, so the rent just keeps climbing during that period. At the end of a lease term, there may be a market rent review where the tenant and the landlord will go to the marketplace and go, okay, what is the market rate for that particular office space in that particular town? That's a big process, and one that we've been really working hard at to make sure that the value of these assets, given a lot of the times our buildings are some of the best in those regional areas, there's no comparable evidence for that level of office accommodation in those spaces. So we can't sort of go and have a look at the local accountant's office, for example, local lawyer's office, because it is just completely different level of building. So we start to compare it against other similar assets in different locations.
So in that respect, I mean, if you're building at 3.5%, then, I mean, that's well above interest rates at the moment, right?
Yep.
And CPI. And two, if you have like the linkage with CPI, it's pretty much like a floating rate, effectively. Because I'm just thinking in terms of like, so again, I'm putting on my like portfolio management hat here and thinking in terms of like what piece of the pie kind of does this still share from? And so, a lot of those further up the risk curve listed instruments are actually probably offering a lower return than something like this. So when you think about this, because there's a number stated when some of the stuff you've done previously, and I know a lot of our listeners will have experience with things like Centre Group, BWP, those things. When you look at an asset or even the fund in general, how do you calculate indicative returns? Because I think, is it 7%? Am I mistaken there?
Yeah, 7.2%.
So that's the indicative forward yield. Is that the way you think about it?
Yeah, correct. So for financial year 21-22, the predicted return based on the modelling that we've done so far modelling we do every day,
Yeah.
is 7.2%.
Yeah.
If you put your dollar in today.
Yeah.
We look at, we've got a long-term WALE for our fund, weighted average lease expiry.
Yep.
And that's derived through taking all the leases inside the fund and taking the average expiry of all those leases, and depending on if it's a really big lease, say for the building in Ipswich where there's 17,000 odd square metres, that obviously has a bigger weighting than a smaller asset that, like we've got in Melton, for example. It's only 800 square metres.
Yeah, right.
So we work out our WALE at the moment sitting at 7.8 years. Which is quite a healthy WALE. So we know that we've got guaranteed income at this level for about 7.8 years. And we run that through our cash flows and work through all of our outgoings, all of our expenses, and out the bottom pops out a predicted return. There's always a little bit of fat in that to make sure that, if there's any issues with any of the assets, we might need to replace air conditioning or replace some services with inside the assets. Always a bit of room for that. But we generally try to push out as much as we can to our investors.
Yeah, because I mean, you don't often see things with a 7 in front of it these days.
No, that's right.
Yeah,
that's right.
And so I guess one of the things that it would be remiss of me not to ask is like about risk. So how you think about like leasing risk across the portfolio, because the Ipswich property is, if I'm not mistaken, the biggest property.
Biggest asset,
yeah, and it's in the biggest fund, which is
Correct.
Auslink Property Trust number 2.
Correct.
How do you think about across the whole portfolio? Because if you invest in the fund today, you're getting exposure to everything. How do you think about concentration risk with regard to like tenants and who pays the bills?
Yeah, correct.
How do you think about that?
Yeah. I mean, that's our job, is to continue to diversify this fund as much as we can. And that's been the mandate for the fund from day one, is to continue to grow it and diversify it as much as we can. Look, we acknowledge we've got about 60% of our income derived from the Queensland state government at the moment. It's something that we look at pretty closely. So we look at those assets and go, okay, how many different tenants, different departments are inside that building? Is it one or is it many?
Yeah.
And then we start to think about the leasing risk going forward for those assets. How long are we predicting the government to stay inside that asset? Are they likely to move? So that's all part of the thinking process when assessing them.
Because traditionally, or at least in the past, with Centrelink, going back to those days, I think you started with like federal government.
Yep.
And now you've got a lot of state government exposure too, right?
Correct. Yeah.
I imagine they're pretty good tenants though.
They're great tenants.
Yeah.
Honestly, like you know,
right, okay.
and I think working closely with them, they can be a bit fickle and they can be a bit they can demand a lot from the asset, which is good. You end up with the best asset in those particular areas. We were speaking about Broken Hill before.
Yeah.
Our office is one of the best office buildings in Broken Hill. The government are in there and they demand that level of service and that level of asset.
Yeah. No, I think there's one more question that I have around, which is again one of the reasons that we are catching up to do this is how you go about raising capital in a post-COVID world, or even in some parts of the country as we record this, they're in lockdown. Has it changed? People's perception towards property, or has it got better or worse? Like, what are you seeing?
It's funny. Like we when the pandemic first came in sort of January last year, February last year, we went out for a cap raise then.
Yeah.
And that was to at that point in time, that was our biggest cap raise that we'd ventured out on, and we had to close it early because there was that many people rushing to it to just put their money in something that, in some ways we talk about resembling government bonds.
Yeah.
Like it's government paying the rent. They're the tenant, they've got the leasehold, and they've got long-term leases. So
yeah, right.
Yeah, we found a lot of people chasing just that security, put it somewhere that we know that it's going to get a return.
Yeah.
At the moment, we've been working through a close network of people. We've got a lot of friends and family who invest with us, and the word just starts to spread that, hey, get involved in this asset. A lot of sort of referrals from existing investors is going out into the marketplace. Hey, give these guys a call and get in there. We do a lot of work in our AGMs too. We normally do a road show.
Yep.
We go and visit all of our investors and have a beer with them and catch up, and we can sort of talk about what's going on with the fund and referrals has been a big part of it. Of our cap raise.
Yeah. I think, during COVID, a lot of people were kind of losing their shirts thinking what's going on.
Yeah.
But yeah, it's kind of went for those people, this is going completely the other direction, right? Okay, so this has been a really good conversation, really good primer. And thanks for educating us because
thanks for having me on.
Yeah, it's kind of new for me.
Yeah.
But if people want to get in contact with you or to find out more about getting involved in investing, how do they do that?
Sure thing. Jump on our website, www.castlerockproperty.com.au.
Yeah.
There's some information on there about the Auslink Property Trust number 1 and the Auslink Property Trust number 2.
Yeah.
Have a flick through the different assets we've got in both different funds. There's a button on there they can click to register for more information and receive a copy of our PDS. Our PDS, very detailed document, goes through all the ins and outs of the investment and all the different risks associated with it. And that will be available for people as of today.
Cool. 1st of July.
1st of July.
Yeah, wonderful.
Which is great.
Great, mate. Well, thanks for coming in and having a chat with me.
Thanks so much for having me.